AMA session. Today we're going to discuss about can AI unlock the next wave of RWA adoption or not. And today we have three interesting speakers. So our first speaker is Senior Business Development Manager. It is Melania, our representative from PIPO. Elsa, we have Diana, CMO of Atlas Oracle, and Jeremy, co-founder of WageFlow. Our first part will be about the introduction. So here I would like to give a word to Melania and introduce herself and our product.
Hello, everyone. My name is Melania, and I'm handling business development at PIPO. We're building the first regulated platform for issuing on-chain warrants on pre-IPO company shares. And I would like to explain this like in simple words what exactly means. Most people know DeFi as space defined by tokens and yield. We offer something different, like a real legally protected right to stake in private companies before they go public. Here is how the model works. We select late-stage private companies preparing for listing on Nasdaq or other stock exchanges. We structure an ERC20 warrant token issued under Regulation S, making it accessible to investors worldwide, except excluding U.S. residents. This warrant gives our users the right to purchase shares at fixed exercise price, strike price, at the time at the IPO. If the market price at the time of listing exceeds your strike price, you profit from the difference. And since it's a warrant rather than the share itself, your cost is just a fraction of the share price, making the risk to reward ratio highly attractive. You also don't have to wait for the IPO. You can trade the warrant on PIPO secondary market even before the listing. This means real price discovery, real liquidity, and no asset lockup periods. When the IPO arrives, you can either convert the warrant into actual Nasdaq traded shares, or sell it on the secondary market for USDC. Shortly, that's what we are doing at PIPO. Hello.
Thank you. Yeah, Diana, we can hear you. Yeah, amazing. Thank you so much, Melania. Here I would like to give a word to Diana, and we'll be happy to hear your introduction and shortly about Atlas Oracle and what you guys do.
Hey, hello everyone. This is Diana from Atlas Oracle. So Atlas Oracle is a market intelligence oracle, which means we're building a market intelligence layer for all of the protocols, RWAs, and stable coins, DeFi. That anyone that they need a price feed, they need price to calculate when to liquidate. For example, when they want to liquidate, if they are a lending protocol or if they are a perp dex, they don't know what's the price. For example, when humanity it happens, there were 5 prices on the market, but which one to be trust? So Atlas has a consensus score, which means it tells you how confident the price is. So you can know that, oh, there might be something happens. And then if you trigger a Atlas alert, you know that you need to make execution immediately. Okay, thank you.
Thank you so much for the introduction. Very interesting project. Here I would like to give a word to Jeremy. Jeremy, can you hear us?
Yes. Can you hear me?
Yeah, we can hear you quite well.
Okay, perfect. Yeah, thanks so much for the invite. I'm Jeremy. I'm a co-founder at WageFlow, in WageFlow, we're building the global settlement and liquidity network for earned wage access assets. And earned wage access, I'm pretty sure that maybe not many people are familiar with this term. It basically stands for a financial instrument, a financial assets that can help global workers, especially blue collar workers, to access their salary before their payday. So let's say if you're, let's say, a blue collar worker in Canada, and in Canada, salary is usually paid by fortnight. Basically, every 2 weeks you get your salary. So let's say if you get your salary on the 15th of every month, what WageFlow can do is that we can basically let the Canadian worker to access his salary before 15. So let's say if the worker needs the money, on 6th or the 7th of that month, before 15th, which is his payday, we can basically give the worker a portion of the salary that he has already earned from the 1st to the 7th or the 6th of that month, which is essentially a few days of salary that we can basically give the worker in advance, to the salary that he has already earned. So you can think of that as like a financial assets that we can basically cover, a shortage of cash for those global workers. And the reason why that, so-called EWA, or earned wage access, exists, is really because of the global economy is not performing that well, especially after pandemic. So many of the global population, especially blue collar workers, they're living paycheck to paycheck. So what we are providing is essentially, as I said, a small cash advance before payday to satisfy their cash need. So, and the reason why that I'm here, with all of those crypto native guys here, is because we're using liquidity from crypto, liquidity from on-chain environments to finance those off-chain EWA assets. So yeah, glad to be here.
Amazing, amazing. Thank you so much for the introduction. Yeah, and here I would like to move to our next part. So we already heard all projects. So let's hear the opinion and thoughts about the RWA in general. So this question for all. So where does AI earn the right to be in the RWA stock? What do you think here, Melania?
Um, well, at PIPO, we believe AI earns its place in the RWA ecosystem when it solves real operational challenges, not just when it's used as a marketing label. Today, AI delivers the most value in areas like compliance, risk analysis, portfolio management, um, and data processing, of course. It can analyze large amounts of information much faster than humans, identify patterns, and help improve like decision making in general. Areas like organization, underwriting, and pricing can also benefit from AI, but they still require human experience, like human expertise, human touch, regulatory. Oversight as well, and reliable data, of course. Those decisions have real financial and legal consequences. So AI should support experts, not just replace them. That's my opinion on it. At PIPO, we see AI more like as an enabler that makes RWA markets more efficient, transparent, and scalable. The goal isn't simply to make products like AI powered. Uh, it's to use AI where it creates measurable value for users, businesses, and broader financial ecosystem. That's what I think.
Thank you. Thank you. Fully agree. Here I would like to hear what Diana thinks here.
Hey, thank you for the question. Well, where does AI earn the right to be in the RWA stack? I don't think AI needs to be everywhere. So I know everybody is talking about AI this cycle. I just think AI is so the biggest opportunity isn't to replace the financial institutions. It's helping them process the information at a scale humans simply cannot. So I think this is the biggest opportunity for AI to process information at a scale that humans cannot simply do it. So for RWA in this situation, I think AI is especially valuable in transforming fragmented disclosures, feelings, news, and alternative data into structured intelligence. But AI shouldn't make the final financial decision because we all know that AI could have illusion and you cannot rely on AI for the final financial decision. So it should help human and protocols make better decisions too. That's what I think.
Yeah, yeah, 100% agree here. Yeah, it's very interesting when people trying to input AI everywhere. Yeah, that's true. Jeremy, so what do you think about where does AI earn the right to be in RWA stack?
Well, I can only speak for our standpoint because I think what we're doing in wage flow is more for like a let's say a narrower perspective on RWA because we don't involve it with any actual actual assets, but rather just financial instruments, financial assets, globally speaking. So I think from our opinion, the reason why that EWA or earned wage access exists or started to boom in the past couple of years is really because of the help of AI. Because as you guys probably know that in the past time before AI is born, a lot of the risk judgment or risk let's say system in a lot of the fintech companies. They're usually done through very traditional machine learning algorithm. I'm not sure whether many of you guys are technical here, but let's say there's some very traditional machine learning algorithms like linear regression, gradient descent, just those kind of algorithms. They were widely used in many of the fintech companies for risk scoring for different users. And now because of AI, the boom of AI, especially the AI architecture that is based on transformer and deep neural network. It basically lets us to score and judge on users' profile in a much more deeper and also black box way, which basically makes the AI not that interpretable, but it's much more powerful, which also means that we can essentially, let's say, provide better and stronger experiences given the same level of risk compared to the past time. So I think that's how we see AI in this world. So I mean, AI is definitely very important. Give us a much broader scope of decision making and especially information input, as Diana mentioned. From our opinion, this ability will be very quickly commoditized across different fintech institutions and companies in the coming couple of years. So for WageFlow, we try to be the first one doing that, or maybe be the first one in the first batch of doing that, to further provide higher liquidity, better liquidity using crypto, and more precise and broader risk evaluation with the help of AI. So to global basically working population. So that's my answer.
Thank you. Fully agree, and quite impressive answer. I think that you answer more deeply than we expected. Yeah. So let's move to the next question. So, um, can better intelligence create liquidity or only describe this liquidity? Like we all know, like AI can improve price and show the market depth. Like like many people do believe like there are no many buyers on the market, like it's just type of bubble. What do you think here, Melania?
Thanks. Well, yeah, I believe alone, like AI alone, cannot create liquidity. Liquidity comes from active participants, trusted infrastructure, and accessible markets. What AI can do is make those markets more efficient. In my opinion, AI improves price discovery by analyzing large amounts of market data, identifying trends, and helping participants make better informed decisions. This can increase confidence and reduce inefficiencies, especially in the RWA markets. However, if there are too few buyers and sellers, AI cannot solve that problem on its own. Real liquidity requires adoption, strong distribution, and the market participation. Um, we like at PIPO, we see AI as an important enabler, like not a replacement for healthy market dynamics. Combined with tokenization and better access to investment opportunities, AI can help create more transparent and efficient markets, which over time can support stronger liquidity, of course.
Yeah, very interesting opinion. Just my like there. Diana, what do you think about this? Like, can better intelligence create liquidity or only describe this liquidity? Do you see the bubble here? What do you think?
Well, I agree with Melania, of course, that liquidity comes from buyers and sellers. AI cannot manufacture liquidity. But there are still something that AI can do, can help, and I think it makes sense. So, what AI can do is to improve the price discovery. They can identify fragmented markets with the intelligence of AI, and they can reduce information asymmetry. And that means, although better intelligence doesn't create liquidity, but it can help capital to find liquidity more efficiently. I think that's my answer. Thank you.
Thank you. Thank you for sharing your thoughts on it. Jeremy, what do you think? Can better intelligence create liquidity or only describe it illiquidity? Do we see the bubble here or not?
Yeah, I actually mostly agree with Diana. So nothing much to add on, but I just feel like this ability for AI to keep improving very shortly in the past in the next couple of years is very likely to exceed the ability for human to trade. So I think in terms of the actual trading ability and the information, the quickness for AI to gather information is definitely going to exceed a lot of the pro traders in the very short future.
Thanks. Thank you so much for sharing. Very interesting. Yeah. Then we're moving to the next part. So mostly about the data trust and institutional adoption. So what do you think, like garbage in capital out? Who is accountable for bad data? Like we all know, like RWA models depends mostly on fragmented off-chain records, like delayed disclosure and etc. etc. Like who should own this data quality? Like uh like source oracles if these models are wrong. What do you think here, Melania?
Well, well, trust in RWA starts with trusted data. And logically, AI is only as reliable as the information it receives. So data quality is a shared responsibility across the entire ecosystem, I believe. Asset issuers, data providers, Oracle networks, and platform operators uh, have a role in ensuring that information is accurate, timely, and verifiable. If any part of that chain fails, the risk affects everyone, basically. I believe that accountability should always remain with the organizations managing, like with the organizations managing the infrastructure, not with the AI itself. AI can help validate, of course, analyze and detect inconsistencies, but it cannot replace proper governance and responsibility, like organizational responsibility. As the RWA market grows, stronger standards, better data verification, and transparent reporting will be essential to building trust and protecting investors and users.
Yeah, agree. But here I would like to hear more voices, more opinions. Diana, what do you think? Who is responsible for the wrong data? Uh, what do you think?
Yeah, I think this is a very good question because no one has ever really questioned when like garbage, like when there's a bad data, like who's responsible it is. Like when RV got the 290 million lost, no one was actually questioning like is the data responsible for this. They only question RV helped out those who's related with the retail users that cause them lose money, but no one ever questioned. So I think about the data. So I think actually this is a very good question. As we know, garbage in, garbage like garbage out. So I think no single party owns bad data, and data quality is a shared responsibility. Data providers, oracles, protocols, and AI models as well. They all play different roles because we think about from the very beginning until a user loss. There are Oracle. Before Oracle, there's data providers that provide the data to the Oracle. And then Oracle feed the price to the protocol. And then in some protocols, AI model plays different roles. So at Atlas, we believe that an Oracle should never pretend uncertainty doesn't exist because there is uncertainty. Actually, I have posted. I don't know if you guys know that yesterday there's 3 projects got hacked, and there's tons of millions of loss. Just yesterday, it was people were joking about it that it was a hacker day. So I've posted about it that actually Oracle is related. If you use a intelligent Oracle, it can help you to know what happened at the very beginning to help you to prevent that much of loss. So I think Oracle should never pretend that uncertainty doesn't exist because there is lots of uncertainty. So if a confidence of a price drops, the protocol deserves to know. And we all know that yesterday, very early yesterday, B Square got hacked as well. And then we realized it at the very early point, I think the day before yesterday. And then we immediately contacted our protocols like EastDAOs that who are taking B Square to help them to prevent from loss. So because by bad financial decisions often begin with bad data. So, as an Oracle, I think I think we has the responsibility to let the protocol know at the very beginning when the confidence of a price is dropping. And the confidence dropping can have many different causes. It could be caused by hacker, it could be caused by a bug, it could be caused by like wrong minting, bridging, lots of reasons. But you need to know it at the very beginning that there's something happening in the market and wants to cause your attention. Thank you. That's my answer.
Thank you, thank you. Very impressive answer. Here I just want to add, like it's too early to trust all your money into the AI hands. Let's say that. Just if you're afraid, like invest lower amount. Just simply. Okay. Jeremy, what do you think about this question? Like, who should be responsible for the bad data which is provided by oracles, data providers, and etc. etc.
Um, I think this is a really hard answer. Sorry, this is a really hard question to answer because the question itself is not clearly defined. So according to the our previous discussions by other guests, I suppose that the bad data basically refers to the data that can cause financial loss for projects, right? If that's the definition, then I would say, the one that should be responsible for that is obviously any infrastructure, any project that support this price discovery, price beating procedure, right? I mean, if you look into Web2, fintech world, if the price is mispriced, is misreported, then obviously the company will go to lawsuit. I mean, just gonna be sued over. And it's gonna be in a lot of troubles, obviously. But I think, let's say, if we're in crypto, then that's a different story. Um, Mostly still because the industry is not fully regulated. It's not fully regulated in many of the countries in the world. So there could be some gray areas as well. And there's that's exactly also the reason why a lot of platforms are can still be arbitraged in many across different opportunities, different scenarios. So yeah, I think it's just it's going to be a process that the regulatory requirements, the regulatory pipelines will become more formalized, legalized, which basically will impose the responsibility for data hacking or data misprice, misleading, to go to very specific party. Will be responsible by a very specific party. And by the way, actually, I want to respond to actually the last question. I think maybe some of you guys already mentioned that I think crypto has entered a new phase, which I totally agree on because I think in the past time crypto used to be very is a very bubbleized industry, right? I mean there are a lot of there are a lot of misleading information. I mean the projects they're flying all around. We're all like doing AMA like what we're doing right now. I mean the past. I'm not saying this is bad, but just there's too many. Right, it's too overwhelming. It was too overwhelming back in time, but now I think as the industry gets into more legalized area, um, and which also includes the problem about bad data, bad information. It basically means that the opportunity is getting more legalized, is getting more popularized, right? Getting more so-called massively adopted, which is also a good thing because we see a lot of the projects in the past time which have no value, which have actually no income. If we look into those projects as real startups, real companies, the value of those companies like shit, is nothing, even negative value because there's no cash flow. All of those companies have to die. I have to say that, and this is a good thing for the industry. the industry has to be deglobalized. So yeah, so just glad that we are all still here and talk about who should be responsible for bad data, bad information, which basically makes the industry more thriving in the future. Yeah, that's why I think this is a perfect time to build in crypto now.
Very interesting thoughts. Yeah, yeah. Uh, it's too early, but in general, it's still right time. Yeah. Thank you for sharing your opinion, Jeremy. And here we're going to mostly for the projects. So the first question for the PIPO, Melania, this question for you. Like, uh, can AI price private markets change without creating false precision? Like, how PIPO use AI to monitor signals, or maybe uh, like doing some things without human judging, or help to investors to get something more than other won't see.
Well, thank you for the question, Rowan. Um, I think the first thing we need to recognize is that AI cannot magically determine the right price for every private company. Private markets are inherently opaque, and the quality and the frequency of available information can vary. Significantly. One company may publish strong operating data, while another may remain silent for months, for example. Sometimes the most meaningful signal is not a financial report, but a new funding round or like a major client, a regulatory issue, or a change in management, for example. For PIPO, the value of AI would not be the replacing human evaluation or producing perfectly accurate number. Uh, its its value would be in helping us identify important changes earlier and process a much larger volume of information than would be possibly manually, like only made by humans. AI could perform initial scrolling, like monitor relevant signals and flag an asset, like can flag also an asset when the underlying conditions appear to have changed. But it should not automatically replace and reprice an asset based on a single data point or on a opaque model. The final decision still requires human judgment, in my opinion. Uh, our team would review the broader context, the reliability of the sources, the relevance of each signal, and whether the change is temporary or genuinely affects the company's long-term value. For investors, transparency is just as important as the valuation itself. So we need to clearly show when valuation was last reviewed, which signals were considered, also what information remains unavailable, and whether the price is based on recent transactions, for example, or a valuation model, or broader like market comparisons. So in our view, AI should act as a monitoring and decision support layer. Um, it can make the process faster and more consistent, but every meaningful valuation decision still needs uh, to be verified by human, like by our team. AI models can work with incomplete information, misinterpret signals, or create a false sense of precision. So the technology is delivering quickly, yes, but it's still at a relatively early stage, and especially when we apply to private market valuation, that's very important to be kept in mind. Thank you.
Thank you. Thank you so much for your answer. Um, yeah. So just nothing to add. Yeah, I agree that a bit early to trust AI fully. Yeah. Here I would like to move to the next question. To the Jeremy and WageFlow. Like, what smarter liquidity without algorithmic pressure on the workers? Like, could AI forecast employer level wage obligations and price in the wage? Like how it works, these different models when people using your product, how it works.
Yeah. Can you repeat the question?
Yeah, for sure. Like, what smarter liquidity without algorithmic pressure on the workers into their product? Like, could AI forecast employer level wage obligations and price in wage, and how this liquidity turning workers into risk scores models onto the people, all of them using the product.
Yeah. You're saying that the liquidity on wage flow or the liquidity on crypto, how is it gonna influence the risk score for workers?
Yeah. I mean for the your product, of course.
Well, yeah. So I think there are two.
How it should works. Yeah. Just simply for understanding
Right.
for our listeners. Yeah. Thank you.
Right. So I think yeah. I think there are two main factors to answer this question. So I think actually one side is the liquidity for sure, and the other one is actually AI. And the reason why the liquidity is so important is because right now, despite the crypto market being super bearish in the past 2 years, 3 years, the on-chain capital still reaches historical high, right? If you look into the amount of stable coins sitting on top of all various kinds of blockchains now, I think it's close to 400 billion stable coins now, which is like still constantly growing despite market being super bearish. So bridging liquidity to off-chain or real-world assets, especially profitable assets, I think it makes a lot of sense, especially from a business perspective, because right now, the liquidity on crypto is definitely hit to a stage where the supply is far more than demand, for various kinds of reasons. So I think that for that part, the liquidity that WageFlow is bridging is, we try to use liquidity on crypto, idle liquidity on crypto, to fund, off-chain profitable assets, which in our use case, in our business case, is the so-called EWA assets, and that's one for liquidity, and the other one is AI, and maybe AI part is more relevant to, the risk scoring part that you mentioned, which is basically refers to. When a user is using had their like different kinds of digital footprints in their let's say fintech world. So let's say for a Canadian worker, they're using his bank accounts. He has like frequently used bank accounts. His let's say credit cards, debit cards, et cetera, et cetera. So we have, let's say if we can get, let's say a year of cash flow from its accounts, then with the ability of AI now, especially AI that is based on transformer model, which it basically enable us to, basically look even deeper, unsupervised in an unsupervised way of the historical cash flows of that user, and that's going to be very powerful because in the past time, as I mentioned, The traditional way that fintech companies score its users is using very traditional linear algorithms or very traditional machine learning algorithms, which are mostly so-called supervised learning, which basically means that the risk system or the people can back they preset a certain kinds of features. So let's say how much you earn, how much what's like the monthly earning for that worker. Like what's the confidence level do you think that the worker can repay next month? No, those kind of preset features that are already predetermined by people in back. But now with AI, we don't have to do that, or we need to only do part of that. And many of the other features are not predetermined, which basically means we can use more flexible and more variable risk scoring system to predict users' behavior. Which also means, to go back to my very first answer to the very first question, which means that we can basically enlarge our business or increase the capital turnover rate with the same level of risk, which essentially means that the user, let's say a Canadian worker, he can get more, um, even though his cash flow doesn't change. In let's say compared to the past historical similar products that he used in the past time. So I think this is basically AI ability just give us more confidence and better control, especially risk control, in this day and age, and we do expect that ability to further expand. Yeah.
Thank you. Very impressive answer. Yeah, just nothing to add here. Yeah, and Diana, the next question is for you, like mostly about the Atlas Oracle. Yeah. So, how like where does effect and of the model and estimate to begin? Like, let me simply explain that. Like many RWA like lacks continuous market prices. If if AI should divide the fact and its price, uh, like how it should determine this price, like what the better price for RWA asset here, what it would be.
Yeah, thank you so much. I think this is a very good question. Like when people are asking about the RWA provide, very few people thinking about how should we use the price generated by AI, because we all know that stock, it ends at every day, and it doesn't, you cannot buy it at the weekend as well, but RWA is a different case. So I think that's exactly the problem we are trying to solve. AI can generate a price, but generating a price is very different from generating trust. How much you can trust the price. AI can always generate a price. You ask it, it always gives you an answer. It doesn't like to disappoint you. But protocols shouldn't only ask, what's the price? They should also ask, how much should I trust the price? That's why we built consensus score. So consensus score doesn't predict exploits like all of the hacks I have shared about yesterday. However, it measures whether market conditions remain healthy. If exchanges begin to disagree, market fragmentation increases, or confidence deteriorates, protocols receive another layer of information before making the risk critical decisions, which can cause the millions or billions of loss. So sometimes the safest answer isn't just another price, it's acknowledging that the market no longer provides enough confidence to publish one price. So the future of oracles isn't just delivering prices. I think it's helping protocols to understand when those prices deserve to be trusted or not. Thank you so much.
Thank you so much for the answering. I think that we're coming to the end of this AMA, and here the last question. That's mostly exciting personally me because we already getting closer to give all access to AI agents of our portfolio, of our debts, our all our assets in general. So, what do you think? Like, is it safe to trust AI, such type of privacy of your assets? Like AI could know how many money on your bank account, on your crypto wallet, what debts, and exactly banks own your debts, what exactly bank, and is it trust? Is it safe or not? And what do you think about these? Like, can AI and privacy get along together? Melania, what do you think? Could you trust AI, your privacy on it?
Well, me personally, like I would think twice if I have to be honest. Like I, of course, I see the utility of AI and why do we need it and like how much improves basically our lives and also in terms of like like business activities and everything. But like there is also the moment that you really need to, I mean, to double check everything and to think actually how this data will be then saved and who is going to be owning it and who is also going to be using it. um, so that's a little bit of a tricky question. I mean, I believe that's a good, in terms of collecting data and like analyzing everything correctly and stuff. That's definitely an advantage. But then, in the way how I personally feel about it, it's more like I would like to avoid it, or somehow being able to have some kind of control or understanding of where exactly and who is like where is my data stored, why, and who is actually using it, like for what reasons, um, or not using it but just holding it or like whatever. So yeah, that's what I think on this one.
Thank you. Thank you. Very interesting thoughts. Yeah. So the same question to Diana. Like, would you trust AI to know all about your financial, about your portfolio, not to manage, but simply to understand by the end of the month, like your uh, your expenses, your income, and etc. etc. What do you think?
Yeah, I think we shouldn't like make AI to become the scapegoat. Like responsibility, they should remain with the institutions who deployed those AI. Otherwise, people can just say the AI should take the responsible and then people can do bad things or build bad AI. So just as cloud providers, they don't make lending decisions. AI shouldn't own financial liability. So I think the real answer is governance, clear accountability, human oversight, transparent models, like transparent algorithm methodology, and strong risk controls. Yeah, that's my thought. Thank you.
Thank you. Thank you so much. Jeremy, what do you think? Could we trust AI to know about our data, about our portfolio, and etc. etc. Not to manage, but probably maybe unpersonal. Like the AI would not know that that is personally you, but it collect your data. Would you trust it?
Um, right now, I think for the trend that I have seen so far, I don't think like we can ever. Yeah. Sorry. Can you repeat the question?
Yeah, for sure. Like, can you trust Because yeah, can you trust to AI to not manage your portfolio, but to collect and analyze these data, like how many assets do you own, like what debts do you have, and et cetera, et cetera, et cetera. It might be impersonal, but would you support that or not?
Yes. I remember that. So, yeah, I think this is a very deterministic trend so far, as far I can see. As I can see, we still don't have the solutions for that. But I do think this is a very important topic for the crypto space. I mean, this is what crypto is born for, right? I mean, for confidentiality and also shared verifiability and transparency for new technology. So I do think there's a big chance for crypto to at least solve part of that. But right now, I personally don't see that. I mean, this really require you know very hardcore cryptographic computer science stuff that resist AI or at least manage AI somehow. But right now, I think most of the projects that I have seen so far, they're all just pure hype. Still like the old crypto play. But I am very excited for this direction. But so far, I don't see any solution for that. And the reason for that is just simple because AI is useful. I mean, when it's useful, people will use it. So if you have a very useful assistant, then for nearly no cost, you'll definitely use it, right? So I think right now is a new technology, and it got a lot of the features that human themselves cannot do. So yeah, so just to trade functionality with privacy, or to trade sorry to trade your personal information for convenience. I think this is a no-brainer for most of the people. And I mean, this is also a question for many of the project in the past time, because they focus too much on verifiability, focus too much on trustlessness, which in actual reality no one care. um, but right now we have to find out a way. I mean, AI is so powerful, so that transparency and privacy matters to a certain extent, which basically makes the feature of crypto, the feature of blockchains, to be more should be more emphasized. So yeah, there is a chance. I mean, there is a pretty big chance actually for crypto to play a role there. But yeah, just anybody has a good idea on how to solve that. Love to discuss it. But so far, I haven't seen any, not any, but not too many good projects on that area. Yeah.
Thank you. Very interesting thoughts. Uh, well, I think that it should be topic for the next AMA. Very interesting. Yeah. Um, just nothing to add here, and hopefully that, yeah, I think that we'll select this next AMA topic. Yeah, just want to say thank you all for participation of this AMA. It was really interesting to hear your thoughts about AI features and its strength and weakness. Hopefully that we in the future will see how this new financial structure will work, because as Diana mentioned that there are many hacks. Hopefully this will be solved quite soon, and so we'll see a new financial system more safe and comfortable for retail users and institutional, of course. Thank you so much for the joining. Just wish you good weekend. Thank you so much.
Bye bye.
Thank you, everyone. Thank you, people. Thank you.
Thank you.
Thank you. Bye bye.
Bye bye.